Hello, everybody. Welcome to this week's Inside the Charts, brought to you by Vantage Markets and myself, Adam from Trade with Precision. So I'm going to start off here with the US dollar index. So the reason that I want to draw your attention to it is that when you look at it from a monthly perspective, we are looking at it within a range. I should have placed that before I started speaking. So here you can see we are at the bottom of the range for the dollar index, and actually this is a monthly time frame. It looks as though it has now produced a strong swing low at the bottom of the range. If we just go down to a weekly version of this, you can see that we had this very nice bullish divergence. So actually I'll do it on a daily time frame so I can show you this now. Remember, the dollar is of course the biggest currency in the world, not just in the markets, but not just in the currency markets, but obviously in commodities as well as the stock markets. So just want to show you here, we've got these lower lows on price, we've got these higher lows on the MACD. We've also broken this week. This last week we had a really strong week. Not only that, finished off with non-farm payrolls, another record jobs report under the Biden administration. We can see the price broken above these previous highs here. So much stronger dollar now appears to be attempting to work its way back up towards the top of the range. So what I am looking for this week, any potential pullbacks, I'd be expecting temporary dollar weakness. I expect the dollar now to continue to do that. So what does it mean? It means that if I look at other pairs such as euro dollar and I go to say a weekly time frame, here I'm seeing a strong rejection of resistance, and I'm expecting to see if price continues to head down and then finds support in some of these most recent areas on the levels of the high. But that downtrend now on the daily, much more of a downtrend than an uptrend. If we go and compare this to, for example, sterling still has an uptrend intact. In fact, going back all the way through till April, the pound has been much stronger against the dollar than the euro has been against the dollar. But this time it's a very strong bearish candle, and I want to see what happens with it. So I'll be, just changing time frames there. So I'll be looking this week to see if these support levels hold. So this puts it at around about the 1.300 level. We'll see if it does that, but I am expecting at least this week to see price continue to head lower. So what does that mean for Aussie dollar, US dollar as well? I would expect it at this point to head back down towards the 50-period moving average. Yes, there is a level of support and resistance at these previous highs. And so therefore, yes, it might find support here. However, I think that this dollar push is quite strong, and therefore I wouldn't be surprised to see it push a little bit further than that. Dollar CAD as well. So dollar CAD, again, this is interesting here to me. This has got a very nice little bit of support over here. Bullish divergence, the MACD trending higher, but we've got lower highs on the lows over here. And again, I expect dollar CAD to continue to push higher. Interestingly enough, dollar CAD is also one of those ones where if I look at it on a monthly time frame, you can see that it is very much range bound. There we go. Just put that in for your viewing pleasure. Go back to that daily, and here you can see that it is in the middle of that range looking to work its way up. So especially if we break these highs. Now, a stronger dollar could indeed help it do that. Let's move across and have a look at gold. So gold, my only real concern has been for a while is that gold is very much overextended on a monthly time frame, and I would really like to see a retracement back down towards $2,400 or $2,300 to $2,200. However, when we look at it from a weekly perspective, it's not as overextended. But what I would comment on this last week has produced a bit of an inside spinning top. What does that mean? It means that this can potentially lead to a reversal. So what I'm going to be doing this coming week is monitoring the highs and the lows of last week's candle to see if we break the low. If we break the low, we will then likely trigger a retracement down towards the moving averages. Next up is looking at the Dow, and you can see it's very, very similar. We've got a little bit of what's known as a hanging man. And so hanging man candlesticks often occur at the end of a long move. We could see a trigger, we could see the beginning of a weekly retracement should we break the low of both of these last 2 weeks worth of candles. So that's just something that I'm going to be keeping an eye on. Looking at it from a daily perspective, however, it looks much more bullish. We've got a really nice consolidation sideways, finishing with a strong push on Friday, and therefore we can see this clear consolidation. It's now back in the moving averages, so the momentum from a daily perspective is actually much more with it to continue to the upside. So that's why it's valid that if we do end up, instead of continuing up, instead we break the lows, we're likely to see that weekly retracement continue. Now, if we have a look at the NASDAQ as well, you can see a beautiful retracement, pullback right into the moving averages, and it's already started its next leg up. The MACD generally producing higher highs, just showing that this trend is relatively bullish and still intact. So for now, I expect this to continue to head higher. One of the things I wanted to just draw your attention to then is if we especially start to go and have a look at, say, the Nikkei, you can see this very strong, beautiful correction that we had during August and how well it's recovered. It is also now attempting to continue to push up a little bit high. I want to see if we do encounter some resistance around these previous highs. Now, very quickly before we wrap up, just to go and have a look at US 10-year bonds. And this is interesting from the perspective of, let me just go here, we had a relatively strong correction on Friday. And if I have a look at it from a weekly perspective, you can see that it has pulled back into the moving averages, and we do have some previous lows here. So what I'm going to be looking for is to see if we do indeed have a bullish week this week for bonds. If they've started to trend higher. The question will be if this level of support will hold, and we will get a nice bullish candle over the coming week, and that will indicate that the markets are likely to take another push higher. And then the last one on my list today, out of interest, is Alibaba. This is something we've spoken before in several episodes back, where we spoke about how Alibaba had started to go sideways, and some of the Chinese markets, Hong Kong as well, was starting to look more and more bullish, and you can see that we've had a very strong breakout to the upside. What I'm going to be looking for in markets such as this would now be a subsequent retracement back down towards the previous highs, or back down to the highs I've just drawn in. So these two levels will become of interest to me now, but this market is now starting to look bullish. Remember that we are in a bull market, and bull markets tend to last longer these days, so we could be in for the bull market for the next 5 to 7 years or more. So really starting to see this as a good sign that the Asian markets have started to follow suit, even though they were lagging. And I'm going to leave you with that. There's plenty to look forward to this week. And don't forget to keep calm and carry on trading.